Then welcome on board Vijay Tadani, who is the co-founder at NIIT and Vice Chairman and Managing Director of the company. Hi, very good morning and thank you so much for your time. Firstly, when I look at your numbers, your revenue did grow by 8% on a YoY basis, but the margins have contracted. Geopolitical and the tariff war, the concerns regarding that seems to have impacted your earnings in the quarter. But if you can tell us what really transpired, how are you seeing these factors impacting your earnings?
Some of the commentary and the economic uncertainty which has been happening in the marketplace. And since, as you know, most of our work happens in the Western Hemisphere, and in the North America, for example, the North America contract that we have for training real estate people, I think that contract we saw a significant decline during the quarter, which is attributed to the market commentary on various trade issues which were happening between in that part of the world. And to that extent, and that is an important contract in our kitty. The second part was also there were some deferrals and cancellations of training programs for which orders existed, and those have been deferred and perhaps will appear in the first quarter of this year. And this was basically coming out of the economic uncertainty. However, our inflow of new customers was very good. We signed 3 new MTS contracts. Our total MTS customers are now at 93. Our revenue visibility is at 390 million. And I think our usage of generative AI in the L&D space actually is taking a premium position. And we are very well regarded in this space by our contemporaries as well as by our customers. So I would say this, this was a change which caused by economic uncertainty, a small change in the trajectory. But I think we will be back to this now that the contract mix and the product mix will change as we go forward. So I think we will recover from this over the next 2 or 3 quarters.
Okay, Mr. Tadani, morning. Thanks for joining us. I just want to get a little bit of a follow-up on what you've said. You said you would have liked to see quarter 4 earnings be better. Help us understand what were your expectations in the first place, and also if the worst of the trade war uncertainty-related impact on earnings is now behind us.
Yes, if the current commentary was to be believed and it was to persist, I think things would, my own judgment is, and anybody's judgment is better than anybody else's, but our own judgment in this case is that this political uncertainty, at least to an extent, will now result in some kind of a stability which will at least cause the anxiety levels to come down, and therefore the cost pressures are real. The cost pressures are real for the economy. The fact that major technological changes are required, they are real. But people just held their hand and didn't press the button to go forward as much as they would have liked to because of the uncertainty. So I feel in the coming quarters, I think that part of hesitation will slowly go. And much, of course, has to be seen by how the rest of the year pans out. And given our strong order book and pipeline as well, we do feel that we will grow faster than we grew last year. Last year, whole year, we grew at 6% YoY, but I think we expect to see a faster growth this year. On top of that, our new order pipeline as well as the new contracts that we have are all pointing in the right direction. And we also see a margin improvement as we go forward. Just to inform you that we have always maintained that our steady state margin is 20%, and we have always believed, but over a period of time, we had been seeing that our margins were north of 20%. So even in the quarter in which we just finished, it was at 20%, which is, I think, the baseline margin that we have always said the correct margin for this business.
And all right, when we talk about your margins, then it's been a 20% steady state margin guidance that remains status quo. But since you are saying that the revenue will rebound in the quarter, what will your guidance be for quarter 1? And from 430 crores of revenue in Q4, can we expect 500 crores or higher revenue in the first quarter of FY26?
I wish The uncertainty was the switch which has to be switched on and switched off. Unfortunately, it doesn't happen. People respond in real time on a different rate. We are obviously feeling positive about, and we are looking at a margin which is better than 20% for the rest of the year, and a growth which will be better than 6% that we had over last year. I would say it will be substantially better than that. But I think we have to play it by quarter on quarter till things stabilize, and not only stabilize in your and my mind, but stabilize in our customers' minds as well, because each one of them is in their own situation are having multiple variables at play.
Okay, and Mr. Tharani, you also said that you are very premiumly placed when it comes to AI. With any AI coming up, any new product launches or tie-ups on the anvil for the company, as reskilling becomes an important topic now?
So reskilling is a reality. Upskilling, reskilling, changing the mindsets of people, changing the way people work are all very positives. Cost pressure is extremely strong. All these are pointers to, historically, pointers to an uptick in outsourcing, and outsourcing to specialists who understand the business, who understand that part of the business. And we think we are very uniquely positioned. Our win rates are extremely high. We get invited to just about every possibility, every time anybody thinks of training outsourcing. So if the need is high and the need will get accentuated and the hesitation go away, I do feel that our pipeline, a strong pipeline already, as well as the build-up of pipeline in future, would all contribute in the positive direction.
All right, and any new customers that you have added in the quarter gone by, any new customers in the pipeline which could get on board in the near future?
We added 2 new logos, one from hospitality industry and one from aviation. And many of these are at various stages of contracting. And we added 3 new MTS contracts, which I told you that took the number to 93. The strong contracts that we have, which have to finally materialize when all the I's are dotted and T's are crossed. That part will happen over the next few months. But I think what we have already, which is signed, delivered, and we are delivering to it, is itself adding up to $390 million of revenue visibility, the way we express our revenue visibility term. And we think in the coming year, we would see an improvement. Whenever there is a discussion on generative AI or AI in L&D, learning and development space, I think NIIT's name comes at the premier location because of the extensive work that has been done, as well as the benefits that we've been able to demonstrate. NIIT itself uses generative AI very, very extensively. Customer usage in customer data with customer programs, that depends on that customer's policy, and we respect that policy to the extent that the customer would like us to, and accordingly, there the adoption changes. So in last quarter, we said this is the first case where we have a full-scale implementation of AI in a customer case. And we feel very good about it because there just about everything that we are doing, all the aspects of the service that we are delivering is leveraging AI to the best. And I'm sure this is the first of the many that we will see as we go forward.
Sure, point taken. Thanks so much, Mr. Thadani, for joining us this morning and sharing your outlook on where the company is headed and giving us a better sense on your Q4 earnings. On that, we'll let you go.
If you like this video, then like, share and subscribe to ET Now.